Hello YouTube stackers, this is ST with Silver Stacking 101, where we always believe in staying stat and packed. Stat with silver, gold, food, ammo, and pack the means necessary to defend our stat. I want to take a few moments and talk about rational financial markets and irrational financial markets. What constitutes each one, how it affects us, the individual investor. Before we go and buy an investment, we need to understand, are we buying into a rational market? What constitutes a rational market? A rational market is where the trading price of an asset or a class of assets or the aggregate of the market as a whole is representative of the underlying economic value of the asset. Now, how do we determine the underlying economic value of any asset? Well, dissertations have been written on this subject. For our purposes, does it make logical sense? This investment is trading at this range. That's the only way we can do it. Now, we're going to go over what constitutes an irrational market. That's where an asset, class of assets, or the aggregate market as a whole is trading well below or well above the economic value of the underlying assets. Rarely, and for short periods of time, do markets trade below the value. It happens, but it doesn't happen for long because value investors recognize this, come in, start scooping it up, putting the demand into the system for the asset, which restores the price up to a rational level. We do typically see what we call speculative bubbles within a class of assets or the market as a whole, which causes the trading process to go well outside the range of reason. The first recorded speculative bubble was in 1600s in Holland, and believe it or not, it dealt with tulip bulbs. You know, you plant them in the ground, you get a pretty flower and all that crap. If you want to look this up, because I'm going to make some wild assertions here, it's called Tulip Mania. The Dutch started trading tulip bulbs. It got so high, the market got so high for these bulbs that one single bulb was trading at 10 times the annual salary of a skilled craftsman. People were pooling their money to go in to buy a fraction of a bulb. One day, someone woke up and said, you know, it's just a dang flower. The market collapsed. People that bought into a bubble lost their money. Now, what makes markets irrational like this? The human being is a very emotional creature. I would submit the human being is the most emotional creature God put on planet Earth. Markets are composed of people, and these emotions carry over into financial markets. There are three human emotions that are prevalent in financial markets: greed, fear, and the herd mentality. Humans like to follow each other. We go as groups. We might not say we do, but we do. We have the herd mentality. That's exactly what happened in Holland. Everybody wanted in, following the herd. A speculative bubble formed, and then it eventually burst and a lot of people lost their money. But it happens today. Let's go forward to some examples. I'm going to use some examples from different markets. And this can happen in the currency market, real estate market, equities market, commodities market. To a lesser extent, the bond market is somewhat mathematically driven. It can also happen within the metals markets, and we're going to cite a couple examples in just a second of that. Okay. In the late 1990s, if you remember, anything tech was hot. You put .com behind a name, all of a sudden it had market value. Investors were paying a premium for these companies that had no semblance of a business plan that would make money. But follow the herd and don't want to be left out, the greed mentality, money poured in. A bubble formed, then it burst. Now we're going to come back to how to make money off speculative bubbles in just a minute. Let's jump forward, 2008, October 2008. The financial services markets were decimated because of bad lending practices by a few firms. Okay. Prior to that, everybody had to be in because of the housing bubble. So money flowed into these financial services companies. They were reporting profits hand over fist. Also, people were paying enormous premiums in the price to earnings ratio, anticipating future growth that couldn't be sustained. Even the present growth could not be sustained. It imploded. A lot of people lost money. Same thing with the real estate market. I was watching CNBC about 2006, and CNBC was interviewing an investment club in Florida that was doing real estate, pooling their money and flipping property, and they were making double-digit returns. I think it was Bill Griffith asked, "How long do you anticipate this going on?" Now they were making like 17, 18% a year returns. The guy looks at the camera and says, "There's no end to it." I'm afraid the guy probably got his lunch ate for him in fall 2008 into 2009. This happens with the silver market. Let's go back to the late 70s when silver had its huge run. There was no justification for it, but people bought in above any level that could be justified because they didn't want to be left out in the cold. They wanted to make the money because everybody else appeared to be making money. So they had the greed going on, and they were following the herd. Everybody was getting into silver and gold. It was great until it burst. Jump forward 2011, we had a repeat of that. Now, the silver market is somewhat stable. It is somewhat rational. I'm 49 years old. In my lifetime, it has only became irrational twice. Late 70s, 2011. So understanding that a speculative bubble is forming, the market's becoming irrational, it's being driven by greed, it's being driven by herd mentality, allows us as the investor to go, no way. Because the only way we can make money in such a market is to pay too much for an asset and hopefully get somebody to pay more than we paid for it before the bottom drops out. That's a dangerous way to invest. That's speculation. That's gambling. We don't gamble. I hope we don't gamble. We're here to invest. So how do we use this information? If we insulate ourselves, because we're not going to do this type of action, how do we make money from this? Well, here's the cool part about these speculative bubbles. Oftentimes when they burst, and all speculative bubbles burst, there's value to be had. Let's walk through some examples. Let's go back to the tech example of the late 90s. People were buying anything tech, didn't matter if the company was going to make money in the future or not, had to get into tech. If it had .com at the end of the name, it was a buy. when the bubble exploded, there were some good companies that were tech companies that got guilt by association. They got knocked down. Take Microsoft. Is Microsoft a real business with a viable business plan that's designed to generate profit? Absolutely. It became a good buy. A value investor, when the bubble burst, could come in, scoop it up, hold it, and enjoy nice long-term returns. Okay, jump forward to the financial services crisis. Let's take one example. BB&T, which is a bank. It did not engage in substandard loans. It did not engage in risky lending practices. It was well managed. It didn't need a bailout from the government. It didn't take a bailout from the government. But it got guilt by association. So when the whole financial services industry got decimated, BB&T got knocked down, it became a great value. Came in, scooped it up. I did personally. Was very happy with my returns. This is a speculative bubble that burst that allowed me a profit opportunity after it burst with very little risk. Let's talk about the real estate market. Florida, when the market crashed, people still have to live somewhere. The demand for housing was still there somewhat, just not at the price it was trading at when the bubble was going. In Florida, you had real estate going for 30 cents on the dollar. Also, I don't live in Florida, but it happened where I live too. One was able to come in for very little money and buy houses where the rent in 1 year paid for the house. So when the bubbles burst, it generates an opportunity for us. It's important to understand, like I said before, when we buy into an asset, are we buying into a speculative bubble? Are we buying into a rational market? Very rarely will we see it irrationally low, except usually right after a speculative bubble burst. And then there's quality to be had for a short period of time. Now, speculative bubbles can go on for long periods of time. It can accomplish the market as a whole, the aggregate of the market. It can be a segment of the market. It can be a very small group within a segment of a market. But they do happen. Don't get caught up in herd mentality. I gotta have it because everybody else is having it, or the greed mentality. If I'm not into it, I'm going to miss it. This is how this information is relevant to us, the individual investor. Please let me know what you think. Do you agree or disagree? Let me know what you think and why you think it. Please give me a thumbs up. Subscribe if you haven't. Thank you for watching. God bless you. And remember, stay stacked and packed because we are going to need it very soon.